Fundamental Analysis Deep Dive on Stock Decoder. Here's a comprehensive breakdown of Anand Rathi Wealth's Q1 FY27 results, separating the headline noise from the core operational reality. 1. The reported versus adjusted profit discrepancy. At first glance, the headline numbers look explosive. The company reported a total income surge of 52.1% YOY to 432.26 crore rupees, driving a massive 74% YOY jump in reported net profit to 163 crore rupees. However, looking at the unaudited consolidated financial results in 10003833953 linked to .jpg and the standalone results in 100383956 linked to .jpg, this spike is heavily distorted by other income. This line item rocketed from just 10.10 crore rupees in Q1 FY26 to 110.27 crore rupees in Q1 FY27. As clarified by the press release in 10003833952 linked to .jpg, this surge is primarily driven by fair value gains on investments. When stripping out these non-operating fair value gains, ESOP expenses, and related tax effects, the core operational performance shows an adjusted profit after tax (PAT) of 116 crore rupees. This represents a more grounded yet still robust 24% YOY growth for their core business. 2. Expense scaling and margin compression. While the core business is growing, the cost of doing business is scaling at a faster rate. Adjusted revenue grew by 18%, but the expense breakdown in 10003833953 linked to .jpg shows that employee benefit expenses surged by over 53% YOY, from 114.81 crore rupees to 176.17 crore rupees. This sharp rise in talent acquisition and retention costs, which aligns with the addition of 35 new relationship managers mentioned in 10003833952 linked to .jpg, has led to significant EBITDA margin compression, which dropped by over 1,200 basis points to 33.74% for the quarter. 3. Core wealth management KPIs, the moat. Despite the margin pressure, the fundamental health of their wealth management operations remains highly resilient. AUM milestone, assets under management officially crossed the 1 lakh rupees crore mark for the first time, reaching 106,300 rupees crore, a 21% YOY increase. Inflows. The firm secured 2,743 crore rupees in net inflows despite a volatile equity market environment. Client stickiness. Active client families grew 13% YOY to 13,941. Crucially, client attrition sits at an exceptionally low 0.09%, highlighting the strength of their client-centric trust model and long-term relationships. 4. Capital structure and IND AS 33 application. From an accounting standpoint, Note 8 in both the consolidated notes, 1,383,954 linked to .jpg, and standalone notes, 1,383,957 linked to .jpg, is critical. It outlines a 1-to-1 bonus share issuance approved in May 2026, doubling the outstanding equity shares. In strict compliance with IND AS 33, earnings per share (EPS) for the corresponding previous periods have been restated to ensure comparability. Consequently, the Q1 FY27 basic EPS of 9 rupees and 82 paise is compared against a restated 5 rupees and 65 paise for Q1 FY26. 5. Audit and subsidiaries. The financial results carry a clean, unmodified conclusion from the statutory auditors KKC and Associates LLP, as seen in their independent auditor's review report, 1,383,955 linked to .jpg. Additionally, future growth levers look active, with Digital Wealth AUM growing 23% YOY to 2,526 crore rupees and the UK subsidiary officially commencing operations, as noted in 10003833952 linked to .jpg. Given the operating margin compression we are seeing due to the heavy investments in employee benefits and new relationship managers, would you like to explore how this currently impacts their forward-looking valuation multiples compared to their industry peers? Anand Rathi to its closest pure-play wealth management peers, 361 WAM, and Nuvama Wealth Management, a stark divergence in valuation multiples emerges. Here's a snapshot of how the market is pricing these firms as of early July 2026. Metric. Anand Rathi Wealth, 361 WAM, 361 WAM, tilde rupee 2050 minus 2090 rupees, tilde rupee 1100 minus 1130 rupees, tilde rupee 1870 minus 1970 rupees, tilde rupee 44,046,000 crore rupees, tilde rupee 44,046,000 crore rupees, 36,000 crore rupees. Note. Anand Rathi's current share price reflects a 1-to-1 bonus issue executed in June 2026, which halved its nominal share price from previous levels of 3,600 rupees plus. Decoding the Anand Rathi premium. Anand Rathi is currently trading at a massive premium compared to the rest of the sector. While 361 and Nuvama are hovering in the mid-30s for their price-to-earnings multiples, Anand Rathi is commanding a multiple upwards of 85x. Here's what is currently baking that premium into the stock price. Aggressive AUM growth and earnings delivery. Markets are rewarding Anand Rathi for crossing the 1 lakh rupees crore AUM milestone and delivering 5 consecutive quarters of net profit growth, averaging approximately 7.7% sequentially. Analysts are heavily factoring in continued robust profit growth heading into FY27. Structural tailwinds. The firm is positioned as a direct beneficiary of the structural shift in Indian retail saving habits, capturing the ongoing shift away from fixed deposits and into equities and SIPs. Macro environment. Broad market factors such as easing crude oil prices, favorable RBI commentary on rates, and the return of foreign institutional investor (FII) buying in mid-2026 have generally lifted sentiment across the domestic financial services sector. The margin squeeze reality check. This is where the Q1 FY27 financial results become a critical piece of the puzzle. The market is pricing Anand Rathi for absolute operational perfection. However, as noted in their latest financials, heavy investments in talent and adding new relationship managers caused employee benefit expenses to spike dramatically. When a stock is priced at approximately 85x earnings, margin compression is a primary risk factor. If operational leverage does not rapidly catch up to these rising employee costs in the coming quarters, it becomes difficult for the company to sustain a multiple that is more than double that of its closest industry peers. Peer context, 361 and Nuvama, 361 WAM. As the largest pure-play wealth manager by market cap, tilde rupee 44,046,000 crore rupees, 361 represents a more mature entity in the space. Its PE ratio currently sits between 36x and 38x, which implies a valuation anchored more closely to steady, long-term growth. Nuvama Wealth. Nuvama operates with a market cap nearly identical to Anand Rathi at approximately 34,000 rupees to 35,000 rupees crossing. Despite the size parity, Nuvama trades at the lowest multiple of the trio at approximately 33x to 34x. In its recent March 2026 earnings, Nuvama cited stable gross margins but also specifically noted pressures from rising tech and employee costs, the exact same operational headwind Anand Rathi is currently navigating. In short, Anand Rathi is currently priced as a high-octane growth engine. Investors are paying a premium for its exceptional client retention and H&I acquisition rates, but any stumble in top-line growth or continued margin degradation could result in a multiple contraction, pulling its valuation closer to the sector mean established by 361 and Nuvama.